Welcome back to Investing Talk podcast.
Today we're looking at Oklo.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Let's do it. And I think we have to start with the massive news, the thing that really put Oklo on the map for a lot of people, the agreement with Meta.
Absolutely. I mean, this isn't just a press release. This is a hard commercial agreement to develop a huge 1.2 gigawatt power campus.
In Ohio, right.
In Pike County, southern Ohio. And you have to understand the scale here. This is directly aimed at solving the biggest problem big tech has right now.
Which is power. Just raw, constant power for their data centers.
Exactly. Clean, firm baseload power. Meta needs it for their AI supercluster, and this is a direct answer to that need. It's a huge validation.
Okay, let's unpack that a little, though, because the timeline is what's interesting. The first phase isn't slated to come online until, what, 2030?
As early as 2030, yeah.
So how does a deal for power almost a decade away help them now? Is it just good PR?
That is a fantastic question, and the answer is in the structure of the deal. It's fascinating. Meta is, in effect, prepaying for the power.
Prepay.
Yeah, they're providing early funding. Think of it as strategic capital. It helps Oklo do two things that are incredibly hard for any new nuclear company. Secure the nuclear fuel they need and fund that very expensive phase 1 development.
So Meta is basically acting like a strategic lender here. They're helping de-risk the entire project from the very beginning because their need is so great.
Precisely. They're underwriting that first-of-a-kind risk, and the scale is ambitious. They're aiming for that full 1.2 gigawatts by 2034. It's a massive commitment.
And that's a great story for the region, too. This is being built on land that was formerly used by the Department of Energy.
Right, so it's a revitalization project. It's creating thousands of construction jobs and then, hundreds of long-term operations jobs in Ohio.
Okay, so that's the blue sky potential. It's a huge story. But we need to shift gears and balance that with the financial reality right now.
Yes. And as an investor, this is what you have to get your head around. Oklo is, for all intents and purposes, pre-revenue.
Zero commercial power sales.
Right. Their income today comes from R&D support, government contracts,
right,
that sort of thing. It's not operating profit.
This is so crucial. If you're looking at this stock, you are trading an option on them hitting these future milestones. You are not buying current earnings.
Not at all. And the margins are, of course, deeply negative because of all the R&D and licensing costs. Now, management sees this as an investment. They're buying what they call option value.
So the idea is you spend a ton of money now.
You sink the capital expenditure, get the reactors built and online, and then the incremental margins on the power you sell are projected to be extremely high.
It's the whole wager.
Yeah.
High pain now for potentially very high gain later.
That's the bet. The good news here, though, is there's financial stability. They have strong cash reserves, and they've avoided taking on a lot of heavy long-term debt.
Which is a huge red flag for a company like this.
A huge red flag. So they've given themselves a multi-year runway to get this done. The near-term risk isn't insolvency, it's execution.
Okay, so let's talk about that execution. The technology. Their competitive moat is built on this Aurora fast reactor. What makes it different?
It comes down to two things, really. Size and safety. They're designing smaller units, about 75 megawatts each, perfect for a data center campus.
And architecturally.
It's a liquid metal cooled fast reactor. So instead of using high-pressure water as a coolant like traditional plants, they use liquid metal.
What does that matter? Why liquid metal?
Because it operates at much lower pressures. This is key. It allows for inherent safety features. The reactor core basically has a built-in thermostat.
A built-in thermostat. So if it starts to get too hot...
The physics of the reactor core itself cause the power level to drop autonomously. It doesn't need complex pumps or a person to flip a switch to prevent a meltdown. It regulates itself.
Wow. So you're stripping out a huge amount of the complexity and cost that you see in traditional nuclear plants.
Exactly. It lowers operating costs, lowers complexity, and that's critical for them to be able to offer power at a price that's attractive to a customer like Meta.
And this is where it gets really interesting for me. Their fuel cycle. They're planning to use recycled nuclear waste as fuel.
Yes, through a process called pyroprocessing. And this is a potential game changer. Instead of burying spent fuel rods, which still contain about 95% of their energy.
95%.
I know, it's incredible. They essentially recycle it. Pyroprocessing unlocks that remaining energy potential.
So that's a double win. You get a secure, long-term fuel supply from what everyone else considers waste, and you drastically reduce the volume of actual nuclear waste that needs to be stored long-term.
It completely changes the conversation around waste. But there's a third piece to their strategy that's often overlooked:
Which is?
diversification. They have a subsidiary, Atomic Alchemy, that's an integrated radioisotope business.
Okay, so this is separate from selling power.
Completely separate. They're aiming to produce high-value isotopes for medical, industrial, and even space applications. It's a diversified, potentially high-margin revenue stream that runs on the same basic platform.
So you monetize the power and you monetize the isotopes. It's a very different model from other reactor companies.
It is. And it's all supported by their alignment with the government. This is a huge regulatory advantage. They already have a site use permit from the Department of Energy at the Idaho National Laboratory for their first reactor.
And they've been awarded fuel from there too, right?
Yes. That signals real government traction. It aligns the company with U.S. national security goals, and it's why they can even talk about a target for first deployment as early as 2027.
You can't ignore the macro environment either. The government is all in on this nuclear renaissance. We just saw that $2.7 billion investment in domestic uranium enrichment.
Which is so critical, because advanced reactors like Oklo's need a specific type of fuel, HLEU.
Right, HLEU, high-assay low-enriched uranium. Explain that for us quickly.
It's just uranium that's enriched to a higher level than standard fuel, up to 20%. These advanced compact reactors need it to be efficient. The problem is, the U.S. has almost no domestic capacity to produce it.
We've been relying on foreign suppliers.
Exactly. So that big government investment is meant to fix that supply chain vulnerability. It materially de-risks the long-term fuel plan for companies like Oklo.
It makes the policy support very, very tangible. Now, the market has certainly noticed all this. The stock's momentum has been incredible.
Oh, absolutely. Up around 300% year to date with these huge single-day spikes, 14% or more, just on news about funding.
That kind of velocity suggests a really strong uptrend is intact.
For sure. But a 300% run? That demands caution. This is a high-risk, high-reward name, and when a stock goes vertical like that, you have to be laser-focused on the downside risks.
Let's spend some time there. The biggest one has to be the regulatory process. The U.S. Nuclear Regulatory Commission, the NRC, this has been a roadblock for everyone.
It's the biggest hurdle. The issue is that the Aurora design is a first-of-a-kind technology. The NRC just doesn't have a clear, established playbook for certifying something this new.
So the path is uncertain, it's slow, it's expensive.
And any delay, and delays have been the norm, it immediately puts that 2027 target at risk, which then puts the commercial timeline with Meta at risk.
So you're not just betting on the tech, you're betting on the pace of a government agency.
Which is fundamentally unpredictable. And that ties directly into financing risk. They have cash now, but building a whole fleet of these things will take billions.
And we did see some insider activity that's worth noting.
We did. The CEO sold a pretty large block of shares, reducing his direct ownership by about 12%.
How do you interpret that? I mean, against a backdrop of a 300% run and all this positive news.
Look, it could absolutely just be personal profit-taking, which is normal. But when you know how capital-intensive this business is, it does raise the question of future dilution. Are they going to need to keep raising money by issuing more stock?
So it's not a panic signal, but it's a piece of data. It's a reminder that this is a long-duration investment. We're talking 5, 10 years.
Exactly. You are underwriting the entire journey from a research company to a massive power producer.
Okay, so as we wrap this up, what should people be watching for over the next, say, 1 to 3 months? What are the new-term drivers?
I'd say two main things. First, look for any updates on that radioisotope pilot plant. That's their diversification play, their first shot at high-margin, non-power revenue. Any milestone there is a big deal.
And second,
Anything related to the NRC, any progress reports on the design certification, any further fuel awards from the DOE, because they're so tied to government programs, policy news can move the stock just as much as commercial news.
so when you put it all together, what does it mean?
It means Oklo is a pure-play, high-beta bet on two of the biggest industrial shifts happening today: the need for clean, reliable power for AI, and the government push for a nuclear renaissance.
The Meta agreement is a massive validation of that thesis. But investors have to be comfortable with the regulatory risk, the pre-revenue status, and the volatility of a stock that's already had such a huge run.
It's the definition of an asymmetric risk-reward scenario. The challenge is immense, but if they execute, the opportunity is absolutely transformative.
A really fascinating story. If you found this discussion valuable, be sure to subscribe to Investing Talk podcast so you don't miss our next analysis.